Our Market Monitor guest says today's pullback in the stock market is a good thing. She's Anne Miletti, Senior Portfolio Manager at Wells Fargo Advantage Funds. So, Anne, you're actually looking for a 10% pullback. You said you would welcome it. Why should investors welcome that?
Well, it's hard to know exactly how much of a pullback we will get, if any at all, but I'm hopeful that we will get some. I think the market has gotten a little bit ahead of fundamentals right now, so it seems to be the multiple that's increasing, but not necessarily the earnings. I think we're headed into the announcement season and pre-announcement season actually for Q1. And if we see too many disappointments, I think there is a chance that the market is going to be disappointed and sell off.
You know, the Dow is up something like 13% so far this year. The S&P about the same, 11%. Is this as good as it gets? Investors have been hoping for a summer rally.
Yeah. You know, I think after a 13% run in one quarter of the first quarter of the year, that's a pretty remarkable return. And I don't think one that most investors expected to get right out of the gate. And so I'd like to see a pullback or, you know, even just some stability here because we are bullish longer term and we want more opportunities to invest.
And yet you still see that there are some good values, some good stocks to buy. And let's look at your list. And actually, you have a very controversial one at the very top of your list, Carnival Cruise Lines. We're very interested to know why you're interested in CCL. What is the attraction, given all the problems that they've had?
Good question, Susie. Well, outside of the events that have made the news, the underlying fundamentals for the cruise industry are actually pretty good. There's less capacity in the industry today than there was years ago, and Carnival, their net yields are actually up year over year, and pricing's up. And so although these events could have near-term impacts to the stock, we're looking out over the next 2 to 3 years and think the stock's trading at a big discount because of these events. So we're looking at the events as being an opportunity to get involved.
Fascinating. Let's look at Nuance Communications. This is NUAN on the NASDAQ. Actually, Carl Icahn made news this week. He bought 9% stake in this company earlier this week. Is that a good sign?
Well, he's certainly finding some valuation attraction, much like we did. We've been involved since the beginning of the year in this name. It's a voice recognition software system that's applied. Most consumers know about it from their cell phones, their Dragon technology, or Siri if you have an iPhone, but it actually has business applications that can provide a lot of cost savings. So for example, in the healthcare system, where you're taking paper records and trying to digitalize them, you can take their technology and use voice transcription to turn into digital records for patients.
All right, let's see if we can get in a third one of your recommendations. This is Dick's Sporting Goods, DKS, on the New York Stock Exchange. Why are you recommending this one at $49 a share?
We think Dick's is a share gainer overall in the sporting goods space. They have great retail locations, primarily in the East and Midwest. They're going to be expanding out west. In the markets they've been in, they have been share gainers, as I said earlier, and we believe that's going to continue. And the new store growth on the west will provide growth for a couple of years to come yet.
All right, lots to think about here. Any disclosures, Anne?
I do own the funds in which we are investors in the names that I talked about, but I don't own them individually.
All right. Thank you so much. Anne Miletti, Senior Portfolio Manager at Wells Fargo Advantage Funds.